Let's put on our longer term hats, guys, and talk about higher time frame trading and swing trading, because we've been dealing with volatile markets since the beginning of the year. A lot of geopolitical concerns, a lot of inflation concerns driving the action currently. We're going to talk a little bit in this video how we can approach swing trading when we're in higher volatility environments like we are right now. And hey, let's be honest, I don't think it's going anywhere anytime soon.
No. Look, we're in a raising rate environment. That means volatility is going to be higher. You're watching the VIX, which you might not always do, but you better be doing it now because that's going to be a good indicator for us. And I think the best way to think about how to approach swing trading in this environment is it's not so much about, okay, where's your support and your resistance, but give me something that's breaking out, right? Like, forget about just establishing a level of support that you can hold on to a couple of days, but let's break out of a defined area as well and then engage in the trade, because then that gives you an out, that gives you an entry point, and it gives you momentum. And I'm going to use Kraft Heinz as an example for two reasons. It made a couple of breakouts recently, and the last one, it was off of a nice lower high, so you put in some consolidation, and then you break out of this range, and then the next day, you get an open above the 50-period moving average, which gives you a couple of support levels, either that previous consolidation bottom or the 50-period itself, and then you're on the run, and you've got room to the next level up. It then makes another break here today as we're shooting this. So ahead of this 38 level, it's breaking out above the 200 period. So you have another breakout happening here. And the key thing about that is, okay, so if you're buying in front of support, obviously you're going to get a fantastic price because you buy it right in front of your level. If you allow it to consolidate and break, you're buying it after it's traveled outside of that range. But when there is more volatility, there is more room for that to run. So you're doing two things here. When you're buying after the breakout, you're giving it more room back to support, and then you're with the move and anticipating there's more momentum with the overall trade. So instead of just sort of jumping in front of a key level that might break, you're allowing yourself more space and making sure you're with the momentum. Okay, so you might be late to the move, but there's more to capture in a higher volatile market, especially when you get some of those breakout trades. So it's interesting to see. There's a strong stock in a weak market as well, Kraft Heinz, but allow it to break that consolidation. It's fine grabbing it that next day as long as you're in new territory. There's more room to run this year, both ways.
For sure, for sure. Swing trading strategies for volatile markets. So, all right, let's just look at this. My strategy is going to be so simple that it's just going to blow your mind. It's just that simple, and that is play the damn trend. I mean, sure, markets are volatile. Normally that means back and forth, but I feel like in today's environment, there's really nothing that you sit there and say, okay, I'm not sure what to do here with Facebook. Like, since they've reported and since this disaster has sort of, came to everyone's looking, 330, look, this is a daily chart. This was back in, let me see if I can zoom this back out a little bit here. This was back in February, right? So right now doing this, it's February 22nd, all right? There's now been how many days of just nothing but downside movements here on the market? Like 1, 2, 3, let's call it like 15 straight down days and 2 up days. So my strategy is very, very simple. You kind of look at some of these things and say, hey, where is my out going to be if I'm wrong? And I would just kind of use like yesterday's high. If you use some of these, and it's going to be a little bit hard to see, but just use some of these wick highs as your outs. The opportunity to make bank on the way down is monstrous. So just continue to look at those. And for my thing, hold something that has been, and I'll call DraftKings up again. Why not? Hit something that's been sort of trending. We can look at Palantir, any of these names. I mean, just look at this trend, right? The market's been volatile here since the new year. DraftKings, how many down days versus how many up days? Just play the odds. If you're going short, sure, some days you're going to get squeezed out, up 4%. No doubt about that, right? But on other, there's big moves. This is 22 down to 17, right? So forget about the move today, up 50 cents. You had $5 if you stayed short, right? Now there's earnings mixed into here, but my idea, Brendan, is as simple as can be. Just stay the course with the movement. If your stock is negative and the volatility is to the downside, play short and don't even look long.
When volatility increases, one of the best things you can do is simplify. Go back to what the basics tell you to do. And in that case, Follow the trend becomes your friend, as they say, or something along those lines. Few tips there, guys, on how to deal with higher volatility markets on a swing time frame.